Good morning. Let's take a look at a problem in which we are required to journalize transactions, post the journal entries into T accounts, and then prepare a trial balance. So before we look at this particular problem, I'd like to review what we have learned so far. What we have learned so far, the basic accounting equation is assets equals liabilities plus owner's equity. Owner's equity can further be broken down into common stock and retained earnings. The difference between these two is common stock is the money that the owners have invested into the business. Retained earnings, as the name suggests, is the past earnings of the business, monies that has been kept in the business. So how does a business earn money? A business earns money by selling goods and services. So within a given period, the monies earned are called revenues. There's a cost associated with earning that money, and those are expenses. These relate only to that given period. So it could be a month, a quarter, or a year that you're preparing these financial statements for. Revenues minus expenses will give you net income. The company has a choice of keeping all of it as retained earnings or giving out some or all of it as dividends to the shareholders. Dividends is basically a part of the profits that are being given to the shareholders. So your revenues minus expenses is in the income statement. That gives you net income. Net income, you add it to retained earnings, and whatever you want, you give it out as dividends. So whatever remains is your retained earnings. Common stock plus retained earnings is stockholders' equity. For every equation, for every account within this equation, we have an account. An account is nothing but gathering of information. So for example, cash is an asset. When I gather all the information from the journal entries, that's basically the transactions that affected cash, I'll put them together in one place, and that's called an account. So just to organize it, I put them on either the debit side or the credit side when it increases or decreases. So just to create a system, we have what's called these T accounts over here. So these T accounts, the two sides, all of them you will see are debits and credits. All of them on the left-hand side is debit, on the right-hand side is credit. So how do we decide whether an account is going to increase with a debit or decrease with a debit? So let's use this acronym over here, DED. We debit in order to increase. We debit all expenses, assets, and dividends. So assets are increased with a debit, expenses are increased with a debit, and dividends are increased with a debit. So what's left? Your liabilities increase with a credit, common stock increases with a credit, retained earnings increase with a credit, and stockholders' equity increases with the credit. So keep this acronym in mind and it'll make life a lot easier. So let's go back to the problem on hand that we have. And I'm going to bring that information in over here. Let me go back over here and copy this information and place it over here so I can use it as a guide if needed. So let's see what we have in this particular problem. Ayala Architects incorporated as licensed architects on April 1st, 2017. During the first month of operation of business, these events and transactions have occurred. So they've given us various business events, and we have to decide whether this business event qualifies as an accounting event that requires a journal entry. So I have each of the transactions listed over here, and below that you will see I have a journal. So it's just a little snippet of the entire journal. I have just the sufficient space for me to do that one journal entry. I also have set up my T accounts, and I've written down the account names. These are the ones we're going to be using, and then I'll show you the trial balance. So let's start with this one at a time. On April 1st, the stockholders, that's the owners, invested $18,000 cash in exchange for common stock of the corporation. So for every journal entry, we have to see, were any assets, liabilities, or owner's equity affected? So all the accounting we do is from the viewpoint of the business. So for the business, their cash balance increased from 0 to 18,000. Why 0? Because it's a new business. They didn't have anything. Common stock was issued. We gave the stockholders the owner's common stock to indicate that they are owners of the business. So I will always write the date. I will write the names of the accounts that are affected. I will write whether it was debited or credited. So let's start with the date. I'm going to write the date, April 1st. Cash was affected, so I will write cash, cash debit, and then I will write $18,000 on the debit column. These two are just columns. In the debit column, I'll write 18,000 because we said it's an asset has increased, therefore I need to debit it. Common stock has increased, and I will put it on the credit side because it's not over here, it means it's not going to be debited, it has to be credited to increase it. And also keep in mind, let's write down the equation. Assets equals liabilities plus owner's equity. I need to make sure that this particular accounting equation, the basic accounting equation, stays in balance. So assets are now 18,000, liabilities is 0, common stock, which is a part of owner's equity, is 18,000. 18,000 equals 0 plus 18,000, so we're good with that. A couple quick things to review in our journal entry. Every journal entry, there are rules and conventions. Rules means they have to be followed. If they're not followed, you have made a mistake, you cannot proceed. Must have a date. We have to have at least one account debited and at least one account credited, which means there could be more than one debit or more than one credit within a journal entry. The total debits must be equal to total credits. These are accounting rules. Again, a date, at least one debit, one credit for an account. Total debits must be equal to total credits within each journal entry. Accounting convention is basically how we do it, we being the accountants. We write the debits first and then the accounts credited. If I flip those around, it doesn't matter as long as I put the amount in the appropriate column. So debits first, credit second is an accounting convention. The credit is indented a little. That's an accounting convention. And typically you will write a small explanation as to what happened in this journal entry. That's an accounting convention, and I'm skipping that part for now. Now from this journal entry, we need to post the information into the ledger. We can do it after each journal entry, or I can do it after all the journal entries have been completed for the month, and I can do it all at one time. If I do one journal entry at a time, if I post from the journal to the ledger one at a time, that's called real-time posting. If I do it at the end of the day or end of the month, it's called batch posting. Given our problem is really small over here, I'm going to do the real-time posting. So cash is debit 18,000. So on the debit side, I will write 18,000. Common stock is credit 18,000. So on the credit side, I'll write 18,000. The next transaction, next business event, not transaction, is I hired a secretary who's going to work as a secretary and a receptionist, and I will pay the secretary a salary of $375 per week, payable monthly. So on this day, I have entered into a contract to hire someone. This person has not worked for me as yet. Therefore, I do not owe them any money as yet. Therefore, on this day, I don't need to do anything, but just to make sure that you understand I have not forgotten this information, I'm writing here April 1st, no entry. In the real world, if you had an accounting software or you were doing it manually, you would not put any entry over here. You just skip over this information. Let's move on to April 2nd. I paid office rent for the month, $900. I paid rent. I paid for rent, $900. What happened to my cash? Cash left the business. Cash has to be credited. What did I get in exchange? What I get in exchange is a benefit of occupying that office space. That benefit is called rent expense. So I'll start out by writing the date. I will write cash credit. So I'm writing that on the second line. The amount is $900. And then I write rent expense debit, and that's $900. Let's take a quick look at this acronym that I gave you. Debit all expenses, assets, and dividends. Now we are looking at an expense and an asset that's affected within the journal entry. Rent expense debit, cash credit. So I debited rent expense and I credited asset, which is cash. So let's see if our accounting equation stays good. Cash decreased, so the asset went down. No effect on liabilities. Owner's equity. Owner's equity, did it increase or decrease? Expense decreases owner's equity. So both sides of the equation went down by $900 when I paid out cash for an expense. On April 3rd, let's do the batch posting, sorry. I will credit cash, $900, and I will debit rent expense, $900. Now let's look at the next transaction. I purchased architectural supplies on account for $1,300. So I purchased something. This is an account. Accounts have been affected. So this is an actual transaction. So I need to write the journal entry. What was affected? What did I get? What did I give? I got supplies. Supplies is an asset. I will use it in the business. So I'm going to debit supplies. My supplies increased by $1,300. I know I have to credit something $1,300 because the accounting equation, I have to, in the journal entry, I have to debit and credit at least two accounts, one each. Did I pay cash? The answer is no. How do I know I didn't pay cash? When you see the words on account, it means you didn't pay cash now, you will pay in the future. Typically, you have 30 days to make payments on credit. We've not been given details over here, but that's okay. What I need to do over here is I need to credit the account, accounts payable. Anytime you see the word payable, it means it's a liability. I owe money now, $1,300. So supplies debit, $1,300. Accounts payable credit, $1,300. Let's move on to the next event and see what it is. On April 10th, I completed blueprints on a carport and billed my client $1,900 for services completed. So I've actually done some work and I have billed my client. So good for me. I have service revenues that are earned. I did the work, therefore it's earned. I can call it service revenue. I know the amount, it's $1,900. Again, did I get the money? The answer is no. Will I get it? Yeah, I sure hope so. So the account I'm going to debit is accounts receivable. It's an asset. It basically says, I've sent a bill, I will collect the money in the future. Again, just like in the previous transaction, chances are I'm giving my client 30 days to make the payment. So accounts receivable is an asset. On the debit side, I'm going to write $1,900. And then service revenue. On the credit side, I'm going to write $1,900. So I'm basically posting. This process is posting. Posting means taking the information from the journal and putting it into the ledger in the appropriate side of the account. On April 11th, I received $700 cash advance to design a new home. So I did get cash, so this is a transaction. So cash is debit, that part is easy. Now I need to figure out what should I credit. Is it service revenue? There was one word that you had to pay attention to. For it to be service revenue, I should have completed my work. Only then I have earned it. I have not done the work as yet. I got money in advance. What happens if I don't do the work? I need to return that money, which means this is a liability in my books. It's unearned service revenue. So the minute you see the word unearned, it means I haven't done the work. I have to still do the work. When I do the work in the future, I won't get money because I've already gotten the money over here. So as of now, it's a liability in my books, but I did get the cash. So cash debit and unearned service revenue, a liability, I'll put that on the credit side. April 20th, I received $2,800 for cash, in cash, for services completed and delivered. So I did some work for a client and they paid me the money. So unlike a previous situation where I sent the bill and I will get the money in the future, This was a cash transaction. I did the work, they gave me the money. So April 20th, cash debit, accounts receivable, sorry, service revenue credit. I already got the money for the work that I did. So cash debit, service revenue credit. This transaction is all complete. I did the work, I got the money. So again, cash debit, service revenue credit, 2,800. Okay. End of the month, April 30th. Now I pay my receptionist $1,500 for the month. So on this day, I do have a journal entry. I'm going to write the date. I know I'm paying cash. I know how much I'm paying. Okay. Why did I pay the cash? Because I got the benefit of the services of the secretary. So that is going to be an expense. The name of the account is salaries and wages expense. Just a clarification of the word salaries and wages expense. Traditionally, we use the word salaries expense for anyone who's an office, who works in the office, wages for people who work in the factories. The words are used interchangeably. Some textbooks will use the words combined as salaries and wages expense. It doesn't matter. It's basically an expense associated with services you receive from your employees. So we'll just use the word salaries and wages expense. So salaries and wages expense debit, cash credit. So again, cash we'll put it on the credit side, salaries and wages expense on the debit side. Okay. And finally, on April 30th, the same day, we paid $300 for the money that was owed. So we are paying the money, so cash has to be credited. Why are we paying the money? Did we get anything right now? No, this is based on something that we owed money earlier. Remember, we owed money for the supplies, $1,300. We're making a payment. So it's a payment on account, which means my liability has decreased. That's why I'm debiting the liability. To increase the liability, I will credit it. To decrease it, I will debit it. My liability has decreased because I've paid the money, some of it, not all of it, but I paid some of it right now. The cash will be credited and accounts payable will be debited. Okay. So now what we have done is we have done all the journal entries. We have posted into the ledger or the T accounts, all of them. So I'm ready to move on to the next step. So let me move my screen over and show you what we're dealing with. I need to prepare a trial balance at the end of the month. So before I prepare a trial balance, I need to find out all the accounts that have a non-zero balance. A non-zero balance means there's something left over in the account. So let's start with the first one. I had 3 debits and 3 credits for cash. So you add up the debits and add up the credits, basically total the columns. They're obviously not the same. If they were same, it has a zero balance. As it's not the same, I take the difference between the two totals and put it on the side that's larger. So the difference between 21,500 and 2,700 is 18,800. I put on the debit side. In my trial balance, I'll list cash on the debit side. Debit column, I will write 18,800. Accounts payable, there was 1 entry on the debit side and 1 on the credit side. The difference on the credit side, I have $1,000. Common stock, there was only 1 entry, 18,000, so that's the balance I have over here. So we do the same for all the accounts. So accounts receivable, there's only 1 debit, we leave that over there. Unearned service revenue, 700 credit. Supplies, 1,300 debit. Rent and expense and salaries and wages expense, there were only 1 debits over there. Service revenue, we had 2 credits, you add those up and that's the balance. I'll bring all of the numbers over. I bring all these accounts over. I'll put them appropriately in the debit or the credit column depending on where their balance is. These 2 numbers have to be equal, the total. And that basically says I have done my journal entries as far as debits and credits correctly. Now I could have debited or credited an incorrect account and this will still balance. But it just tells me that I have at least one debit, one credit. It's just the numbers are correct in terms of the every single journal entry. Now, this was significant in the past when everything was being done manually. This point of whether my total debits and total credits are correct within each journal entry these days with accounting software, you don't have a choice because it will not let you proceed from a journal entry if you don't have debits and credits equal for every single journal entry. But this is an important step in the accounting cycle because we use this to prepare financial statements. So if there was an account that had a zero balance, let's say for instance accounts payable, I owed $1,300. If I had paid off $1,300, it would have a zero balance. I don't list it over here at all. A couple other things I'd like to point out with how I have done things over here. You will notice I listed all assets one below the other. They were all here. Cash, accounts receivable, supplies. All liabilities were listed over here next. And then you had common stock, your revenues, expenses, all of those were listed over here. When you bring them over here, it just makes it easy when you're preparing your financial statement subsequently. All your assets, liabilities, and owner's equity are going to go into your balance sheet. Revenues and expenses will go into the income statement. So it's easier to take numbers over. That's simply organizing accounts, not significant. With accounting software, it will do it automatically for you. So we don't have to worry because in the accounting software, when you start out and you say cash, it will ask you, is this an asset? If you say yes, it will know that it'll automatically have a debit balance. It'll work through all of that. Our job is very simple at this point of time. We are looking at each business event and trying to identify, did it affect at least 2 accounts? If it did, which 2 accounts did it affect? And we identify whether it increased or decreased those accounts. So hopefully this has given you a good overview of what we have learned in chapter 3. Give the homework problem a try and send me questions if you have any. Thank you.